Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Hope everyone's doing well. Happy Monday, everyone. All right, so we're going to kick this off with a look at what we've got coming up on the calendar. This is the trading economics calendar for May 3, of course. And we've got the ISM manufacturing PMI coming up at 10 a.m. So that means right at the end of the clearing. For my day traders, gang, remember this. We have different events, data events, FOMC events, whether that be options expiration, non-farm payroll. But there are certain events that are just going to have simply more of an impact on the market. We've got one of those at 10 a.m. So then the next thing to keep an eye on is at 2:20 p.m. This is all Eastern time. Again, we've got the Fed Chair Powell's speech. Now, normally when I show you guys the economic calendar, I'll do it on the Forex Factory. Sometimes Forex Factory will not have Fed events. I mean, this time it does. So just heads up, there's a speech. I don't believe questions are to be expected. Oh, no, they are. Audience questions expected. So anytime Powell is opening his mouth, that's going to create a high impact, high volatility event. And you guys know how those hot zones can be. So it's the second half of the day, so I'm not as concerned about it affecting the day trades for the morning. But again, all the same, let's keep a heads up. Now, in terms of the overall expectation for market movement, again, this is still very much an uptrend. I mean, I'll leave the Russell out of it in terms of the uptrend. Well, it's not an uptrend. I'll leave the Russell out of it as long as we talk about different uptrending indices. Russell is not in an uptrend. If you are interested in the Russell, keep an eye on the KRE, the regional banks, all right? You definitely want to keep an eye on that. All right, so then what else do we have going on? Well, again, I think in this environment, it pays right now to be even more discerning rather than going after the broader averages. Also take a look at some of the individual sectors, especially consumer discretionary, communications, healthcare, industrials, financials, and tech, XLK tech. These are the most heavily weighted sectors within the indices, and you want to know what they've been doing. And I think when we're trying to understand better sector rotation, when we're trying to understand better underperformers and outperformers, you really want to compare those particular sectors within the broader indices. So there is that. Okay. All right. Lots going on. Let's jump into some of our questions. Kicking it off with, hey there, James. Good morning. I updated my grids and I noted XHB, XLU, and XLRE are mostly double green. Is this a situation where instead of picking one name, I would look to play the overall sector? So sure, if you're looking at the multis, and I know you're always doing the homework on the weekends, James, so if you're taking a look at XHB, take a look at ITB as well, and you see a lot of double greens, well, we still need to remember the opportunity is not only in the first part of structure, which you definitely doing your homework there. The second part is if it's pulling back, is it pulling back to a level that we can do something with? And if it is, then we've got the opportunity. You know, if we've got a pullback in one of the names that is at the wave, at the 21 in a double green environment, that might be an individual stock, might be the first opportunity. If the broader average pulls back in a sea of double green like we have here, well, certainly we don't want to hesitate there, because the cool thing about looking at the tide over the individual boats is I get to bet on all of these and I get a really good bang for my buck. So meaning if, you know, a lot of times the individual ETFs are far less expensive to get into than are the individual stocks. Case in point, you know that in Sector Secrets, we started focusing on XLK as a way to take advantage of movement higher in tech, movement higher in the NASDAQ, and movement higher, or recovery, if you will, in Apple and in Microsoft. So you got it. That you could, but you got to keep an eye on both. So thanks for the question. All right, next up is, and yeah, by the way, if you want to join us in the Sector Secrets Mastery, today is May 1. So this Wednesday, so you got a little time. This Wednesday, we'll be doing our weekly Q&A. And so that means we'll be going over the watch list. We'll be going over our current book of trades, which actually since the end of February has been quite active. We've been looking out on the fringes of the broader averages. XHB is a great example. I'm not diving into NASDAQ. I'm not diving into Dow and S&P only, but rather it's been better to look just outside the influence of the indices. So always know where your individual stocks are, in that overall influence from the broader averages. How direct is it? So thanks for the question, James. All right, can we take a look at AMAT and Boeing? Absolutely. So let's go take a peek at AMAT and Boeing. And we'll start off with AMAT. AMAT is a name that we have liked. And here it is pulling right back into the wave. Now, take a look at where we are from earnings coming up on May 19. So if you haven't already checked out the 642, so this is a great update that's followed up on conversations that we've been having, whether it's in the futures room where we talk about the tail wags the dog season, every year, every earnings season, forget every year, every earnings season, we go back to tail wags the dog. Individual stocks can impact the broader averages. We know what Apple can do to the NASDAQ, to the S&P and the Dow. We know what Boeing can do to, say, the Dow and sectors that it's heavily weighted within. So individual stocks, because of the high amount of attention and the disproportionate amount of potential movement, can influence the tide. An individual boat can influence the tide. So when we have that 642 window, check it out. This is the way that I've been focusing on the way in which a market, if it's trending, can be played into, not through, but into earnings. You have into earnings, basically through or at earnings, and post earnings. I like focusing on pre and post. Are there very specific instances that I'll play through? Yeah, I call that shockwave. They're shockwave patterns. They don't occur very often. I think that's the least active window of the three for those of you that like to look at earnings should really focus on. Focus on the pre. I find too many traders are looking at earnings 2 and 3 days before when they'd be far more, they'd benefit far more by looking 2-3 weeks, if not 3-4 weeks before earnings. So here we are inside the 4 to 2 week window. That's between the green and the yellow, and then yellow to red. That's the 2 week window. So yeah, we're still in the actionable part of a double green pullback buy. And, likely this is going to be a conversation that we're going to have in the Sector Secrets. And depending on the momentum, we'll likely look at some potential setups for AMAT to the long side going into earnings. And then Boeing. Boeing has a very different structure, right? But Boeing is post earnings, which is great. But what Boeing would end up being is more of a distribution fade. Now, what is that? Distribution is the underlying market trend, market environment that we're in. The fade is the actual setup. So this would be more along the lines of looking for a volume ledge or some Darvish support from which to buy off of now that we've got earnings behind us. But this sort of goes back to the earlier question that James had asked. If you're going to look at Boeing, make sure you pull up Boeing and look at the other boats that are part of the larger picture, the other boats in the tide, if you will. Meaning, is this a relative outperformer, or are there other names, whether that be the grouping of the Dow, whether that be the grouping of, say, the ITA? Are there other groupings where Boeing is involved, where there are more bullish structured markets? I wouldn't call Boeing bearish in any way, but definitely do the relative outperformance scan. That's going to be, if there's anything that we do a lot of in Sector Secrets, it's the reliance of understanding boats and tide and that relative outperformance and focusing on the best structured names. And then sort of wrapping all of that up is an understanding of the macroeconomic environment that we're in and capitalizing on those more dominant trends. All right, so next up, Wiley asks about DKS. Earnings in 4 weeks. I love where your head's at, double green, giving yourself time. Yes, I'm with you here. This is a really good market to keep an eye on. We want to see the bearish movement into the wave, which is what we're looking at right now. We want to see that movement into that zone. Bearish momentum is going to give us the ideal opportunity to scoop up those options at a better price. We can work the bid instead of just pay up, which I'm not a fan of unless you're playing some sort of momentum strategy. But if you're not playing a momentum strategy, you want to definitely focus on the advantage you have in a buyer's market, right? Bearish momentum, work the bid, pay as little as you can for those options because that's part and parcel your risk and, quite frankly, your reward. All right, so I like the long position. I do. Next up is snow. Snow is highly compressed. Anything else I should be looking for apart from a breakout with volume confirmation? Gosh, no. What this is, though, that's most of it. So what this is, though, take a look. What was the preceding trend in snow? You know, we're in a yellow market right now. That is true. But what was the preceding market environment? Double red, right? So this is actually a downtrending reversal that we're looking at. So we could view this as a 1, 2, 3. Now, it's not a pretty one, and it looks to be far too long, quite frankly, and it actually hasn't broken out. So the problem here is this pattern is going to have, quite frankly, a little bit too much time for its development. Yeah, we're way beyond 25 bars now, 36 days, a little too far. It doesn't make it invalid. It just makes it lower probability. But what we are looking for, to your point, is a little bit more momentum, a little bit more of an established move through not only this point of control here in that volume ledge that you can see, but through the 34 EMA wave. And quite frankly, look at how involved the 55 exponential moving average is right now. So you can front run this pattern. It's a little tricky. It's more aggressive. You can front run this pattern, but and just presume the breakout. But if you want the confirmation, you know what you're looking for, and you got it. I like the long side of this market. If we can get above the wave, if we can break I would keep an eye on the 55. I keep a really close eye on the 55. And then let's also re-anchor this volume weighted average price. Let me see what this would look like. There's your VWAP in play there too. Take a look at your VWAP. That's really interesting, your volume weighted average price. So keep an eye on that one. A lot of volume importance basically on the other side of, call it 238 to about 243.5. Yeah, okay. Next up is, SYN, sure. Yeah, 57-cent stock, not my thing. But I'll tell you, use the same process. We've got a high that I could anchor this. It's a Feb 10 anchor. Yeah. And a volume ledge sitting at about 71 cents. But I'll tell you what, this is not typically the kind of stock that I would play. Penny stocks have a completely different psychology behind them. I think a lot of people think, well, just apply technical analysis to penny stocks, apply volume to penny stocks. This is a completely different psychology. Anything under $10 and $20, technical analysis is far less important than it is base building, breaking out with volume, base building, breaking out with volume. probably patterns tend to work a little bit better for these kind, because the psychology is so different. So I would also say, the earnings window is still applicable, but not something I would typically focus on for my personal trading. But you can still apply the volume. Definitely apply the volume. You could have some interesting volume levels to keep an eye on here. All right, so let's see, what else do we have here? Rate, RAGE. Rage. Okay, I don't know. Lakshmi, I'm not quite following the question there. Good morning. When I say pull back to the wave, what does that mean? Pulling back to the 34 period exponential moving average on the high, the close, and the low. 3 34 exponential moving averages, same period setting, but high-low close. And it creates a really great dynamic, what I believe is the reversion to the mean that I'm looking for. So you can have reversions to a lot of different levels, reversions, retracements, 6 of one, half dozen the other on the lingo that you use. But what is the level that we feel could be dynamic support? And while I will consider 13s and 21s levels of potential resistance or support, depending on the trend, I like the market to revert to the wave. And that's always been the mean that I focus on. Question about Tesla. Sure. Of all the names that I could be focusing on, I just really don't have a lot of interest in Tesla, Ashvin. And the reason is, I look at the broader averages. Tesla's not participating. Will it play catch up at some point? Look, if it's going to play catch up at some point and you've got a bullish bias, which is what I would personally keep, I would focus on a volume ledge and buy off the volume ledge on a bearish move with the anticipation that we're going to move higher. Again, Tesla was so 2020, right? And so I think that a lot of traders are still very focused on this because they're looking for that next 2020-esque kind of movement. Gang, it's not here, and it's very likely not coming. And I'm not trying to say that to disappoint anybody. It can move higher, but this was not technical, gang. This was a split. And this was the addition to the S&P. And unless you think the split's happening again, which at $707, it's not. And you can't re-add, right? You can't re-add a stock to the broader index. That was a very one-off special thing. And remember, Tesla was also doing this within the scope of probably one of the swiftest uptrends in the history of the market. I think it's really hard to abandon stocks that were so good to us and then now just don't have the narrative. Tesla doesn't have a narrative behind it. Tesla does not have the same swagger narrative that it had behind it in 2020. So will it play catch up? At some point, the rising tide of the broader averages will lift all boats, especially one as heavily weighted at some point as Tesla. But I'm paying very, very little attention to it. The best thing you can do here is wait for a nice volume ledge to occur, buy into that bearish momentum, and then give yourself enough time for Tesla to do its thing. But there are so many other markets that look so much better than this, where I would rather not tie up my time or capital in something that just isn't really one of those names that, look, for every time it does something like this, you're going to end up in a lot of chop. So I guess my overall opinion is just leave it alone. Leave it alone. A lot of other better places in the market right now. Coin, I'm really not very interested in coin right now. Remember that anytime you have a direct listing, so this was not an IPO, it was, I guess they call it DPO. The psychology, look, whatever you call it, DPO, IPO, the main thing is this: whenever you have the direct, there's no holding period. And if you look at the history of direct listings, the weakness that we get right off the bat is pretty swift. It's not the same kind of thing where there's a quiet period and a holding period like we have with an IPO. DPOs, think Spotify, think work, Slack. So remember that it's a very different psychology. And so I'll wait. I would anchor a VWAP. But I think buying a DPO the day that it comes out is about the dumbest thing that, we'll see retail investors do. So I love that you guys are watching it. Wait for some more weakness, buy into the weakness if you believe in the narrative, and go from there. Clearly it's a narrative that's attached to the Bitcoin narrative. right? Maybe not in quite the way, let's say, MARA or RIOT would be, but I like overall the narrative behind it. Just be very careful in the early days post the DPO. If you want to get long before earnings, clearly that's something you can do, but the bottom of the range would be the safest place to do it. I have no skin in the game in coin. Neither do I anticipate doing so until probably after earnings and maybe late May, early June. I need some more data to work with, and then we'll go from there. All right. Gold. Look, I'm a big fan of gold. We've been talking about when it is that gold will get moving. And I said, don't, and we've been saying this for months, don't anticipate movement in gold until you get the movement in the 30-year. The real yield is going to be the kicker. So do I mind being long gold once we've had the 1, 2, 3 complete in the long bond? I don't mind whatsoever. I don't want to be short gold, that's for sure. The 1, 2, 3 is completed. I'm looking for a little bit more strength in the long bond. Gang, if gold's really going to make a big move, don't feel like you need to get in right away. I think a lot of traders hurt themselves by getting in too early. It doesn't matter if you let the first 10%, 15%, 20%. If it's really going to be a significant move, you're going to have a whole lot more in the middle. You don't have to grab the appetizer. You don't have to stick around for the dessert, but it's the main meal. And I don't even think we're at the main meal yet within the context of the trend in gold. All right. And just like that, gang, we are out of time. Thanks as always for joining me for Charts and Coffee. I know a lot of you are going to head on over to your respective rooms, the options room, one of your masteries, the futures room. I'll see you all in both the options room today for the Simpler Showcase and also the futures room for the close. And I will see you all tomorrow, same time, same station, gang. Be good to each other. Until then.